Now, I've just thrown a ton of information at you quickly with very little context. I understand that can be a little intimidating, but my goal is to provide a quick, straight-to-the-point walkthrough for people who are truly serious about making sense of trading and investing. That being said, it's time to get into the next section, setting up your account and making trades. The first order of business is to decide what you want to do with your investments. Are you investing for retirement specifically, or are you looking to generate income on some level now? If you're just planning for retirement, then looking into a retirement account like a 401k, IRA, or other retirement account would be your focus. There are different benefit and contribution plans and tax advantages to each type of retirement account, so your situation will dictate your choice. If you're unsure of what to choose, it may be a good idea to find a reputable financial professional to help you decide. If you plan on generating income now, then some form of standard non-retirement account will most likely be your choice. There are many reasons to pick different types of accounts, but the major reason is taxes. Standard brokerage accounts will usually be taxed yearly, at whatever the current rate is for your income tax bracket based on what you traded, how long you held your investments, and how much you earned or lost. While retirement accounts have different tax structures based on your type of investments, timeline, and goals. Once you've figured out what type of account you want, you'll need to pick a stockbroker. Any of the well-known brokerages will work just fine for general investing and trading. Some examples of well-known brokerages are Robinhood, TD Ameritrade, E-Trade, Fidelity, Interactive Brokers, Charles Schwab, Merrill Edge, and tastytrade. There are many more, but these are some of the most common brokers. The main concerns when choosing brokerages are the country you live in, your investment goals, minimum deposit requirements, what kind of insurance the broker has, and the fees and commissions associated with that broker. Most brokerages these days have no minimum deposit requirements and free stock trading, but some still charge commissions for certain products. For example, Robinhood provides free trades on both stock and options, but TD Ameritrade provides free stock trades and charges a small commission on options trades. While in the process of making this video, Robinhood announced they will now be passing on regulatory fees to customers. These fees are charged by entities responsible for clearing the trades, which allows them to actually happen. They're set by law and are either covered by the broker, passed on to the consumer, or split between the two. Fees and commissions usually aren't bad because they allow brokers to provide better products and services, as well as provide profit security for the broker, thus reducing the risk of future price gouging or bankruptcy in a changing political climate. For example, Robinhood could provide free trades because it makes its money by routing customer orders through a third party who execute the trade for them. This is called payment for order flow, and it's a contested political topic. There has been talk of legislation that will force brokers to send their orders to a competitive market instead of specific institutions, which would, in theory, promote competition and lower prices. If such a law were enacted, Robinhood and brokers like it would have to find another way to make money, which would most likely mean fees and commissions or going out of business. This brings up another important point: insurance. From stockbrokers to regular banks, there's always the risk of losing money. Now, most banks and brokerages are covered by FDIC or SIPC. FDIC stands for Federal Deposit Insurance Corporation, which covers up to $250,000 of deposited money, but not investments. SIPC stands for Securities Investor Protection Corporation, which covers investments up to $500,000, of which a maximum of $250,000 can be brokerage cash. Anything above these amounts are not insured by your broker. Most U.S. brokers are required to have some form of insurance, but brokers in other countries may be held to different standards. So make sure the brokerage you choose explicitly states that it's covered by some form of reputable insurance. Speaking of location, regulations differ from country to country, so some products and services may or may not be available in certain countries, and overall costs will vary. If you decide to use a brokerage outside of your country of origin, make sure you've read up on investment rules for that country, your country's rules on using foreign brokers, and the rules of the brokerage itself before signing up. After choosing a brokerage, you'll need to sign up for an account. Every brokerage is different, and over time, brokers will update their sign-up pages, so what you see may look different when you register. But the information needed is mostly standard, so it will be similar. In this example, we'll be using Robinhood. You'll download the app or go to the website, click Sign Up, and follow the prompts. As with everything, you'll need a dedicated email address, username, and password. They'll send a verification email that you'll have to click the link to verify. Then you'll input basic information like name, address, phone number, etc. Next, you'll most likely have to verify your identity with your citizenship status, birth date, and social security number. Some brokerages ask for a picture of your driver's license or other legal identification. Giving out this info is off-putting to some, but it's normal and has always been a requirement to prevent fraud. In my case, Robinhood did not ask me for any documents or a picture of my identification, but other brokerages I signed up for did. Most brokers will also ask you about your previous investment experience. Regardless of your answer, you'll still be able to access most of the features of any brokerage. However, for more advanced products and margin investing, your answers could affect your ability to gain access to those features. Do not lie to gain access to everything, because you may still be able to access them later. If your broker offers options trading, they may ask you about your experience with that as well. Since Robinhood offers free options trading at the time of this recording, they ask you up front to get you going faster. You don't have to trade options or anything else for that matter, so don't feel like you have to sign up for everything. If you're not sure about it, you can always upgrade later. The next thing brokers will ask you about is your employment status. You don't have to be employed to invest, but for tax reasons, they need that information. If your broker has a drop-down menu with broad industries and your career isn't explicitly listed, pick the industry that best represents what you do. If you own 10% of the total shares of a publicly traded company, you are considered a principal shareholder and are subject to different SEC filing requirements. As a principal shareholder or high-level executive, you have influence in the company and will be monitored for insider trading, which essentially means investing based on information you've gained within a company that isn't available to the public. If you're on the board of directors of Company X and know you'll be releasing a new product next week, then buy a large amount of shares before it's announced in order to profit off the inevitable increase in the stock price, that is insider trading and can lead to a serious fine or prison time. For this reason, brokers will ask you about this to comply with SEC guidelines. Most people are not, and you would know if you were. They will also ask you if you or a family member works for another brokerage, as this could be a conflict of interest as well. There may be a few more questions to answer, depending upon the brokerage you choose, but this application for Robinhood is complete at this point. After submitting the application, approval may take anywhere from seconds to quite a few days, so don't be worried if it takes a while. One of my brokers was ready very quickly, and another took a few days to clear. It all depends upon how they do things on their end. Once you've been approved, the next step will be to fund your account. This can be the frustrating part sometimes, so be prepared for some difficulty. If you bank with a large, well-known bank, it'll probably be as simple as selecting the bank from a list and everything will happen automatically. If you use a smaller regional bank, like I originally did, you may have to go through a longer process. In my case, after filling out my bank account information, Robinhood had to make 2 small deposits into my bank account, which took a couple of days. Then I had to tell the app how much each deposit was so they could verify my account. A few days later, those deposits were reversed and taken out of my account. This is a common method of bank account verification, but there are others as well. Once this step is complete, you're ready to finally fund your account. Most brokers will have a transfer money, fund account, or other similar button somewhere on the main menu. In Robinhood, you click on Accounts, Transfers, and Transfer Money. When the prompt comes up, you'll enter the amount of money you wish to transfer in the top box marked Account. Then select the account the money is coming from in the next box. Then select your brokerage account in the third box marked 2 if it's not already selected. And finally, make sure the last box marked Frequency is set to just once so it doesn't consider this a recurring transfer. If you would like to automatically transfer money at regular intervals, you can select the option that works best for you as well. I just prefer to do it manually. Once you've made sure everything is correct, click Review Transfer. This will bring up a message confirming your transfer and telling you to keep at least that amount in your bank account until the transfer is officially complete. If everything is correct, click Transfer Dollar Amount. The next screen will tell you the deposit has been initiated on today's date and an estimated date of completion. Depending upon your broker, you may have access to the money in your brokerage account before it's officially transferred from your bank account, up to a certain amount. This will only happen if you are in good standing with your broker and have not bounced any payments when they tried to take them out of your account. Accidents happen, so usually one bounce payment won't take that away from you, as long as you correct it and make sure it doesn't happen again. I had one bank account mix up when I bounced a payment early on, and I didn't lose the privilege. But I haven't let it happen since. That being said, all brokers are different and may have different rules regarding instant deposits. When you hit continue, it takes you to the final confirmation screen telling you that you have access to X amount of the money you've started to transfer. This means you can use it for basic investments, but you can't withdraw it until the full amount has been officially cleared. Never use money you need right away, as there is a time delay for these transfers. Hitting continue from here will take you back to the main account page and you're finally ready to go. Now that you've signed up for and funded your account, it's time to explore the platform and make a trade. I'll make a real trade using the Robinhood web browser, as it's a simple, straightforward platform. The Robinhood phone app functions the same way but might look slightly different in some areas. The front page of Robinhood has your account value on the top left and a graph of your profitability underneath. The amount of free cash, known as buying power, is listed below that, followed by the platform updates and special offers. Next is the Discover More area, where you'll see links to different products and services Robinhood offers. Next, we have Trending Lists, which shows you market sectors that are trending on the day. After that, we have major US market indices and cryptocurrency. This gives you an idea of how the overall market moved on the day. On the day of this recording, the S&P 500, the Nasdaq, and Bitcoin are all up over 1%, as a few economic data points came in better than expected, which pushed the markets higher. Underneath that are the stocks that move the most on the day based on percentage. Below the daily movers are important news articles. Not all market news will show up in any broker's feed, but a lot of important stories will. Because of this, it's a good idea to check multiple sources for news, as well as search for the stocks you're interested in directly. These news stories continue to the bottom of the page and are usually no more than a day or two old. On the top middle of the screen is the search box, and to the right of that is the navigation bar. This is where you can view account details, rewards, different account types, and notifications. Settings and account details are all under the Account tab. If you need to adjust your profile, see a breakdown of your investments and account status, transfer cryptocurrency to and from other accounts, transfer money, set up recurring investments, check statements and tax documents, view trade history, adjust settings, access help, or log out, it's all under this tab. You can also access or sign up for Robinhood's premium service, Robinhood Gold, at the very top. The last items on the main page are the investment and watch list boxes. All of your positions will be listed on top of your watch lists, which will reside underneath. Your positions include stocks, cryptocurrency, and options. Now it's time to make a trade. We'll use Ford as an example, because it's a low price, low volatility stock that I don't plan to own in the near future. How to choose stocks will be covered in the next video. Stocks are identified with a ticker symbol, which is a short group of characters representing the stock, usually 5 or fewer letters on major exchanges. But some products or charts can use other characters, and stocks trading on the over-the-counter exchanges might have more than 5 characters. Ford's ticker symbol is F, but if you don't know the ticker symbol for the stock, you can usually type in the name of the company in the search bar or use Google if that doesn't work. When you look up a company, the ticker symbol is on the left side of the pop-up and the actual name of the company is on the right. Notice how there's a ticker symbol that says FORD, but this is not the automaker Ford. It is a company called Forward Industries. As you can see, below Forward Industries is the ticker symbol F with the company name Ford Motor. After clicking on F, we will end up at Ford's page. This displays relevant information about Ford, with a line chart showing Ford's movements on the day. We will get into reading charts in the next video. For now, we're just learning how to use the app. The first order of business when buying or selling a stock in Robinhood is to make sure you're on the correct kind of order. If you do not own a stock, the only option is the buy option. At the time of this recording, Robinhood does not allow you to short sell stocks, meaning borrowing to sell. But if you do own the stock, you need to double check that you're in the correct order. I've made the mistake of buying when I meant to sell more than once, which one time really cut into my profits. The next thing to check is the order type, which is under the arrow in the top right corner. Most brokers have similar names for these orders, but Robinhood recently changed the way they display them. The most basic order is called a market order, which essentially means buy the stock at any available price that allows the order to fully complete. This means that your order will be filled at any price, including prices above or below what you see on the screen. As you can tell, this could be dangerous, as you may lose money before the stock is even moved. This is because of what's called the bid-ask spread. The spread refers to the difference between the highest buyers are willing to pay, the bid, and the lowest sellers are willing to accept, the ask. The easy way to remember which is which for me is the B in bid is for buy, which leaves ask for sell. The price you see on the screen for any stock is called the mid price, which is the price directly in between the highest bid and the lowest ask. In this example, the bid price is $11.65, with 215 buyers offering to pay that much, and the ask is $11.66, with 225 sellers asking that much for their shares. Those are not the only buyers and sellers, as there are bids lower than $11.65 and asks above $11.66. But the sellers want to make as much as possible for their shares, and buyers want to pay as little as possible to acquire the shares. So only the most relevant bids and asks are taken into account with regards to the spread. Seeing orders above and below is called level 2 data, which we will cover in a future video. Knowing how many buyers and sellers there are at different levels is important because it gives you an idea of where price could go or have trouble moving beyond. This is important for trading, but not as much for long-term investing. If an order comes in to sell more shares than there are bids at the current price, the bid will drop to the next highest buyers in succession until the order has been filled. This, combined with the price action, meaning general movements in price, is why market orders can result in a fill that is different from the price you see. To prevent this, you can use what's called a limit order. This allows you to set a minimum price you're willing to accept for your security or a maximum price you're willing to pay. I almost exclusively use limit orders as they will fill at the given price or better. Ideally, you want the bid-ask spread to be very close with a lot of buyers and sellers, which makes getting in or out very easy. Ford is a well-known, heavily traded stock, so the bid-ask spread is very tight, 1 penny in this case. This means Ford is a liquid stock. Liquidity refers to how easy it is to get in or out of something. A liquid stock is very easy to enter and exit, and an illiquid stock is difficult to enter or exit. A wider spread with fewer buyers and sellers would be an illiquid stock. For example, the bid-ask spread on this Ford option is illiquid because there are 27 sellers and no buyers. This means that you could buy from those 27 sellers, but you wouldn't be able to sell to anybody, so you would be stuck in the trade with no out. Options are above the scope of this video, but it shows you an example of illiquidity. I'll explain options in a future video. The last few orders listed are stop-loss orders, which allow you to set a limit to how much your position loses before it automatically sells those shares. Standard stop-loss orders sell your shares with a market order. A stop limit order, which is the same thing, but sells your shares using a limit order, and a trailing stop order, which sets a stop loss that follows your order in the profitable direction until the stock switches directions and you start losing those profits. For example, if you buy a stock at 100, set a trailing stop $5 below the current price, and the stock trends up to 115 before reversing directions back to 110, the trailing stop will automatically sell your shares at 110, since the peak price was $5 above that point. These can be set in dollar amounts or percentages, depending upon your broker. There's also an option to set up a recurring investment if you plan on buying a stock regularly and want it done automatically. That can be nice, but I prefer to do it myself because I enjoy it and it keeps me more aware of my positions and finances. Once you have selected the order you want, in this case a limit order, you can enter the desired price. Since looking at the bid-ask spread earlier, Ford stock has moved to $11.52 with the ask at $11.53. I will set my order to $11.53. You may have noticed that the prices in this video have varied from section to section. This is because I had to film and screenshot on different days during the editing process, and the market moved significantly during that time. If a stock is moving slowly, you can afford to try to get the best price possible. So I would start just above the highest bid and see if you're filled. If not, you can move your order up until you are. Just as a note, since everyone can see where orders are, moving orders around quickly might cause traders to move theirs as well. So sometimes it's better to just buy and sell for a little more or a little less than you want to avoid other parties moving their orders around and widening the spread. This doesn't always happen, but it can, so it's a good thing to be aware of. There have been many times that I wished I had just bought the stock at the original ask price, as playing games with the spread caused movement in the price that cut into my profits or widened losses. This also goes for a stock that's moving quickly. You may not get the mid price or even the current ask price, so you might want to set your limit order above the ask to be sure you're filled in time. Do this with caution because highly volatile stocks can reverse direction quickly, so make sure you're okay paying the price you set. This applies more to trading than long-term investing, but it's an important concept to understand. Once I've determined the limit price I'm comfortable with, I set the number of shares. In this case 1, as this is just a demonstration. Robinhood recently enabled 24-hour trading on some products. The next box allows you to select which part of that 24-hour market cycle the order will be active in. There are 3 phases: regular market hours, extended hours, and 24-hour market. The market mainly runs on Eastern U.S. time because many of the largest financial institutions are located on the East Coast. I'm on the West Coast, so for me, regular market hours are 6:30 a.m. to 1 p.m. Extended hours run from 4 a.m. to the market open, and the market close to 5 p.m. Everything outside of that is reserved for 24-hour stocks. In this case, I've selected 24-hour market as I'm making this trade late in the day. Robinhood will only show you the 24-hour option if the stock can actually be traded during that time. Ford is one of the few that can be. Keep in mind there is much lower trading volume during extended hours, so price can fluctuate wildly and it can be difficult to get in or out of a trade during these times. So make sure you only use limit orders and are okay with the risks if you choose to make moves during extended hours. I personally try to avoid it unless there's an exceptional reason to trade during those times. The next box is the order duration. By default, orders are set to expire at the end of the day, since price can change so much overnight. Most of the time, this is the option I choose for trades. But for long-term investing, you may set a GTC or Good Till Cancel order. These will stay active for a maximum of 90 days on Robinhood. The benefit of this is that you can set a much more favorable price, and you can walk away from your trading setup. Watching the screen can lead to FOMO or panic, so letting the trading platform work for you can sometimes really help. Stocks will sometimes stay in a range, so having a Good Till Canceled order set at the low end of the range for a buy or the high end of the range for a sell order can sometimes help increase profits and reduce risk. After filling everything out, click Review Order. You will then see a summary of what you're about to do. In this case, it's telling me that I'm about to purchase 1 share of Ford for a maximum cost of $11.53, using an order that will expire at the end of the day if it isn't filled. It also lists the bid-ask spread, as well as the price and share amount of the last recorded transaction. If you need to make a change at this point, you can click Edit and make adjustments. Once your order is correct, click Buy and it will show you the current status of the order. In my case, it was filled right away. One share was purchased at $11.52, below my limit price of $11.53. Clicking Done will close the order window, and you're now shown your position. This gives you the stock's basic information. The top left corner shows the company's name and the current mid price. The numbers under that show how much the price has changed on the day in dollars and percentage. On the top right of the stock information is the Alert and Advanced buttons. Alerts will message you when certain criteria are met. Price alerts will notify you when the stock hits a certain price, and indicator alerts will notify you when technical analysis indicators hit certain levels. Technical analysis refers to patterns on charts that may indicate certain movements are about to happen. We will get into technical analysis in the next two videos. The next option is the Advanced chart. This gives you a better look at the stock's chart. This chart shows a green line graph with a blue indicator added on as well. To change the type of chart, click the box in the upper right-hand corner and select Candlesticks. This will show you a candlestick chart, which is my preferred chart because it shows you more information than a line chart. Each candle represents a portion of time and the movements within that time period. In this case, each candle represents 5 minutes. In that 5 minutes, the candle shows you where the price started, which is called the open, the highest point reached, the lowest point it reached, and where the price finished, which is called the close. The body of the candle is where the price opened and closed, and the wicks of the candle are the high and low prices on that time frame. If a candle is green, price went up, so the open is the bottom of the body and the close is the top of the body. If a candle is red, then price went down, which means the top of the body is the open and the bottom of the body is the close. The time frame of a candle can be changed on most platforms, but Robinhood has it set to a standard based on how far back the chart goes. In the top right-hand corner of the chart, we're set to 1D, which is 1 day, and the time frame for 1 day is in 5-minute candle increments. If I switch it to 1 week, each candle represents 10 minutes, and if I switch it to 1 month, each candle represents 1 hour. 3 months and 1 year each use daily candle increments, and the 5-year time frame uses weekly candle increments. The gear icon next to the time frames allows you to change settings, and at this point only allows you to hide or show extended hours. Below that is the price level of the stock, and below that is the numerical value of any indicators. In this case, the RSI, which I'm going to remove to make things simpler. With the indicator gone, you can see the volume a little easier. The volume shows you the number of shares traded for each candle in the chart, which can be very useful information when trading. The very bottom of the chart shows you the timestamp for shorter time frames or the date for longer time frames. The left-hand side of the screen allows you to add, remove, or edit indicators as well as set alerts for those indicators. The indicators you add will show up in the top left-hand corner of the chart and will disappear as they're removed. Above that is the back button, ticker symbol, current price, and how the price has changed on the time frame you've selected. Finally, we have the search bar in the top middle, disclosures, alerts, and the trade button, which brings up the trade window. That concludes the Advanced chart. So we will hit the back button and return to the stock info page. Below the chart, you will see the time frame and the settings bar, and below that is your position summary. Your market value is what the total amount of shares are worth at the current moment. Your average cost is how much you've paid per share and is the point at which you start to make or lose money compared to the current share price. Below that in the left box is your profit and loss on the day, as well as since you opened the position. That's shown in dollar amount and percentage. On the right, below your average, is the number of shares you own in total. The last metric listed in this section is portfolio diversity, which tells you how much of your portfolio consists of this investment. Below your investment information is information about the company and its key statistics like its market cap, dividend yield, highest and lowest price in the past year, and average volume, which are concepts we will also get to in the next video. If you participate in Robinhood's stock lending program, that info would be right here. Under that are broad lists that Robinhood has placed your stock in. After that is current news regarding your stock as well as analyst ratings. Those are both extremely important when it comes to the movement of your stock and are key factors in trading specifically. Under this section are earnings reports, which are just as important when it comes to trading and investing. Again, these will be covered more broadly in the next two videos. Under earnings on some stocks will be the shareholder Q&A. These are questions that Robinhood users have asked the company that were actually answered by the board of directors. Under earnings is your trade history, which shows you all the trades you've made or tried to make. Finally, the bottom of the screen shows you other stocks that people who invested in this security also own. All of this may seem overwhelming at first, but it will become second nature very quickly. Be sure to explore your broker and look up anything you don't understand on the broker's help section or on the internet. Each broker is different, but they all have to function within the same framework, so learning one will help make sense of others. Before placing trades, be sure to go over the order process as many times as necessary to remember the process. Some brokers, like TD Ameritrade, have a paper trading option that is identical to their real money software. If your broker has this option, use it to place multiple paper trades before using real money, even if you're already an experienced trader. This is because under pressure, it's easy to make mistakes or miss out on opportunities. Even as an experienced investor, I occasionally make mistakes during the order process when I'm rushing or distracted. This is why, even when I'm in a rush, I double or triple check the order to make sure everything is correct. So, we've gone over some fundamental concepts and vocabulary in video 1, set up a brokerage account and reviewed the order process in video 2, and the next video will cover how to actually pick investments. How to trade will be covered in video 4. That concludes Introduction to Investing Part 2. See you in Part 3.